fresh funding. Joining us now is Dhruv Arora, the founder and CEO of Syfe. Thank you very much, Dhruv, for joining us here on ET Now. First things first, what is your primary goal with this recent fundraise? Is the focus going to be more on product roadmap, or are you looking at market expansion, given the fact that you're also operating in some of the other markets aside of India?
Yeah, thanks for having me on the show, Samita. So I think part of the fundraise, as you had mentioned earlier, has actually gone towards the acquisition. And one of the big focus for us would be to further actually grow in Australia, which is a very promising market and a very similar kind of a user base, which is in our existing markets of Singapore and Hong Kong. So I think one area is going to be on the focus on Australia, which would be probably a big part of this fundraise. We're also going to be continuing focusing on product innovation, which has always been one of the hallmarks of Syfe over the 6 years of this business. And last but not the least, and I think relevant to today's conversation, a lot of actually, I would say our entire engineering team is based out of India. So we would actually continue to grow that team and actually grow it quite aggressively over the next year as this actually, we're starting to build that whole team for India, for all of the APAC region.
Right, so essentially your focus is going to be on product innovation. So let me expand a bit more on that. Tell us more about what other product offerings from Syfe, and how are you differentiating from the others in the market as of present in this segment that you're operating in?
Yeah, I think that's a great question, Smita. So I think for us, we've always focused on the three verticals, as we say. We talk about access, we talk about advice, and we talk about affordability. And just to give you an example in how the innovation is coming on all the three fronts and where the efforts are going. On the access front, we've just launched private credit offerings to our clients in Singapore. This has been done in partnership with BlackRock. On the advice side, we'll be further growing the human touch in our element. So essentially, the platform is still largely digital. I would say it's 97% digital, but that little rest, there's some people, of course, who need that little human touch. We'd be providing them, and that team would be one area which would kind of grow in. And then lastly comes about affordability. I think just the sheer scale of the operations now. Now, as a combined group, we manage more than $10 billion US in assets, which makes us one of the largest players in digital wealth across APAC. So I think that scale will bring a better price point, for our users. And specifically, when we talk about what products actually mean for users, I think all of these markets, Singapore, Hong Kong, and Australia, they all have their relevant, pension plans. It's CPF, MPF, or the supers in Australia. A lot of our offerings that will come up in the next 12 to 18 months will be focusing on how can they better invest their pension funds. As of course, for a lot of people, this pension saving becomes a big part of their entire net wealth, and it can't be, left isolated with just what they do with their savings and other investments.
Right, Dhruv. Now, when you speak of markets, you mentioned that you're present in, of course, Australia, Hong Kong, Singapore, and of course, India as well. Can you give us a sense of how are all of these markets performing for you vis-a-vis how the India market is performing, given the fact that we have a huge base right here? We have a huge domestic market, which many investors say is a huge plus for them for investing into the Indian market.
Yeah, so we have operations and we are licensed to operate in Hong Kong, Singapore, and Australia. So our customers are based in that market. Currently, we are not operational in India. Customers in India can access our offerings through the LRS scheme. There's a cap of about $250,000 US dollars per customer per year. But we are not targeting the domestic, Indian market just as yet. It's something we might consider down the road. But at the end of the day, we are, as it stands, our focus is more on developed Asia, and that's why the markets that we are present in stand as the markets we are in.
So one final question, Dhruv, before we let you go. By when are you looking at making the India market operational?
Well, it's something quite interesting. We've actually been speaking to a few of the leading players as well as the financial institutions in India to see how we might potentially work with them. I think there has been, as you correctly said, some really interesting innovation and growth, and some very interesting startups, right, that are in this domain in India. So I think it's quite unlikely we would just come into India and try to be another Me Too player. But what we actually want to do is work with some of the largest players. And as the India market gets, more and more saturated, I think, and more importantly, the customers get a little bit more savvy. I think many of them will start looking for international exposure to diversify their portfolio, and I think that's perhaps the way. So I think it's more going to be through partnerships with the larger, financial institutions and startups, vis-a-vis us doing it direct. And conversations are going on, and hopefully by this time next year we might be able to share something more positive.
Yes, and we would love to hear more developments as far as your India market is concerned. But are you well funded with the Series C funding that you have gained? And are there any more markets that you're looking at with respect to your market expansion plans? Any new customer segments that you're targeting?
Yeah. So, I mean, the good news is that our business actually had turned profitable last year. So this additional funding, in a way, just actually, really buffers us up as a business. And I think, a lot of our profits will actually get reinvested for growth. But this additional funding allows us to, even launch and consider some new products. And a good to your second question, a good example of that is the private credit offering, right? Which is now quite a unique offering. It's quite typical for retailers to access it. It's quite tough for them to actually get through with smaller ticket sizes. But now we'll be able to offer them, this product we've launched alongside BlackRock. So our typical user segment is what we would say is mass affluent. This actually will start touching in maybe the higher end of the mass affluent, or what you can maybe say the lower end of the high net worth individuals who are quite happy to be served digitally. So yes, there'll be some expansion, in the user base. As far as the markets are concerned, for the next, I would say, 18 to 24 months, we've just acquired quite a sizable listed business, Self-Wealth, in Australia. For the next 18 to 24 months, our focus would be, doubling down on our efforts in Singapore, in Hong Kong. Hong Kong actually has been doing really well for us. Just in the last
Right.
6 months, that business has doubled for us. And of course, as I mentioned at the start of this conversation, putting a lot more effort and innovation and growth into Australia. So for the next 18 to 24 months, rather go deeper in these markets would be our primary objective.
All right, so you're going to go deeper into these markets and then perhaps looking at starting operations in the India market. We look forward to that development. Thank you very much, Dhruv, for sharing your thoughts and, of course, your company's plans and growth objectives.